So we have a market question: is now a good time to invest in small cap stocks?
Ah, okay. So small cap stocks actually did really well yesterday.
Mm-hmm.
Uh, Doing okay today. I mean, down, but down less, right? Uh, it's really interesting to see what's happening because what goes on historically is that when you have a downturn, uh, basically what comes out of that downturn tends to be your larger cap stocks, your more established companies with great name recognition and cash flow, low debt, those type of things. Because people don't trust the market yet. They're not into that position of, wow, I can't lose.
Mm-hmm.
We get there. We got there in 2020. We got there in 2000. And so and when you get to that position of I can't lose, that's later in that development. It kind of rotates through these different types of stocks. And small cap stocks are generally really, really run in the later stages. And it could be quite a ways away. In other words, you could have that big run in 2020, and now we've seen a lot of those stocks down, 50 to 80%. And that kind of pain to come all the way back and to make money on that, jump back, double again and what have you. I'd say generally that's probably about 5 years away before that really starts because we got to go through these other cycles. Now, having said that, one of the things that's happened is that we have this new group of investors. Uh, Tens of millions of people signed up with things like Robinhood during the pandemic, and we have a new individual investor group that has some sway, and partly because one of the things that has happening at least somewhat frequently is that they're buying call options on those particular stocks. And without telling you all of the details of that, it just magnifies the money that they have, especially on a smaller stock.
Mm-hmm.
Because when they buy a call option, they only put up a fraction of the money for the number of shares that they still have some control over. But the firm like Robinhood or Schwab or TD Ameritrade, they actually have to buy some of that stock. So the more call options that are buying, the more these firms are buying, and all of a sudden you start to see a run up as far as that goes. And so I think that's what we're seeing. The ARC funds and all these different things have had some big, big runs. But so far, at least this year, those big runs have been short and then they fall back down, and we haven't been able to see them sustain. There's some profits to be made there if you're a trader, I suppose, which we don't do. But what really drives the market in the end is the institutions. And the institutions aren't going to run as a group into the small cap stocks. Historically, they've waited for these other cycles to happen. And so you're going to see the recovery come into these bigger companies that have more solid names and solid, track records, better cash flow positions, better cash positions, less debt, all those different things. Some of these small cap stocks don't have earnings yet.
Mm-hmm.
They might be the next Apple. And you could make a fortune getting into those small cap stocks early. I mean, if you can buy Apple before it became Apple, wow, you've done really, really well. The problem is that, for every Apple that became Apple, there's a whole lot of things we've never heard of before because they went out of business,
Yep.
right? I mean, I remember the story about eToys, which was so big, huge company, crushing Amazon, actually. And so there's this big debate about which one should you have, eToys or Amazon. I bet you a lot of people have never heard of eToys because it went out of business. Everybody's heard of Amazon. So you don't know for sure which one it is going to be. Sometimes it's better to buy an ETF with a few hundred of those stocks. That's what ARC is doing, right? So I think that works as far as that goes. But I'm a little leery of sustainability of small cap stock growth. If you really want to hang in there and not trade them until later on in the cycle. I think this is going to be more of a, bigger company, mid-sized company gains that come out of this. Now, whether this is growth stocks or value, that's a really big argument. But if we just ignore that and you just went by market cap from small cap, mid cap to large cap, I'd be overweighted in large cap in this environment as I'm waiting for this market to come back. And we have seen large cap do quite well in these big days too. So it's not like you're losing out too badly. So anyway, it's a very complicated scenario right now, but I think it's worth looking at. I would I'm not invested heavily in small caps right now. We were in 2020 during that run. That worked out great. But, we diversified out of those just because they tend to eventually come back down, which is exactly what happened.
Yeah, and also with the market, we're not sure if it's going up or down right now. Are we having just a bounce, or are we having a sustained upward trend?
Right.
And so, are we catching a knife that's falling, right? If we invest in small caps too early,
Right.
and so you want to be careful of making any big commitments. Maybe you do a small if you're feeling confident that the market's going to return. Maybe you take a small portion of stock.
Yeah, exactly. Yep. Yeah, I agree. I think it's time to watch and wait and see what happens. Again, we're not traders, so if you're looking to trade, maybe, yeah, just because they are kind of low. But that's probably the only way I would do it. I'd be trading, and actually, if you're buying call option, you're forced to trade because the option's going to expire. So you're going to have to sell that option out, hopefully at some higher price before it expires, because they expire at zero. And so, if that's what's driving it, fine. I don't have a significant problem with that, and there are people that do that. It's just not our thing. We deal with really, I think, big quantity of assets, of the household's assets. So I'm not interested in getting involved in some of these really crazy things. But I would stay away from them at the moment because I'm more of a longer-term investor as far as that goes.